Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
All right. Good Monday morning.
Yes, sir. It is Monday.
I have to tell you, the weekend was hot. A lot of activity on the weekend. I don't know about you, but I'm starting to see some buyers loosen up a little bit. I do want to talk about what's going on in the market, what's going on with interest rates. Average interest rates running around 6.25%. That was a report from last week. But if we take a peek at the bond chart, we can see that there was a little bit of a loss in the bonds. If we can see that here, that is the chart, right? That's pretty flat. Wouldn't you say that's pretty flat?
That's relative. That's relatively flat, right?
Here, we were up here and then we're down here. So that's about a 25-point spread. So what I really liken that to is that we were expecting between 1/4 and 1/2 point Fed drop. We got 1/4 point. We didn't get 1/2 point. And I think this is just a correction of what we did not get.
Sure,
And I
sure.
think
You talk about the market bakes that in, right?
Exactly. Now, we were looking at the potential of another Fed cut on October 29th is the next meeting. And
Right.
there is, I think, a 90% chance that they're going to give us another 1/4 point. There's a 10% chance of 1/2 point. But
No, it was a 10% chance of nothing.
no,
was,
excuse me. You're right. That
Yeah.
no
No
change.
change.
That's correct.
Right.
But we have then the December report thinks that we're going to have a 1/2 point cut by the end of the year.
Yeah, I think it was like 70% for a half by the end of the year and 30% only
So
a quarter.
that really means to me that we'll probably get the 1/4 point in October, which I think is kind of weird when you drop them every month like that, every 6 weeks, because it doesn't give the market time to really react. But whatever the Fed has done has not been traditional. So there's no telling. So if it's a 10% chance on whatever it is, that's probably what's going to happen.
I think if I look ahead, and you and I talk about this a lot, if I look ahead and into March, they're predicting 3/4 of a point by mid-March.
And you know what? I think that's going to do the job because that'll put us down in the high fives for a rate. That's going to be just what people needed. My concern is that right now there's 35% more sellers than buyers.
There are a lot more sellers.
That means there's 3 sellers and 1 buyer. That gives buyers a lot of control. As soon as those rates drop, we know that's going to shrink and there's going to be more buyers jumping in the market.
For sure.
So I think that our message is clear. We've nailed it. We told everybody that there was a possibility that rates could get a little worse after the Fed meeting. They're 25 points worse. That's not a plummet. It's nothing to be alarmed about, but it did happen. And that's why you and I do this so that our listeners are educated. It did happen. So all these things that can come together to help us. I think right now, Tom, if you don't get in the market right now, you're crazy, because if you wait for rates to drop, it's not going to help you if a buyer. It's not. It's going to help sellers, but it won't help buyers.
Right. And correct me if I'm wrong, but 1/4 point or a 1/2 point of mortgage rate doesn't impact your affordability that much. It impacts it for sure, but it's not that much that you should not buy because of it, right?
Absolutely 100%. You have to realize 1/4 point is not a 1/4 point to our interest rates. It really affected the bond market to where we improved by about 50 basis points prior to the Fed cut and then lost 25. So we're still improved by 25 basis points. That's $250 per 100,000.
Correct.
It's not a huge move.
No.
It's not a huge move. But if we can get rates down to 5 3/4, even 5.99 on an average. And here's the thing. I got a client right now working with a builder. We're buying this rate down on an FHA loan to 4.99% right now. And that's not a temporary buy down. That's a permanent buy down.
Speaking of builders, I think on Wednesday, the new home construction report is going to be dropped, right? And that's a monthly report, right?
Yeah, it's going to be interesting.
Right. Are we going to see, I predict we're not going to see sales in a positive light.
I don't
Sales are
think so either. And I don't think builders are really ready to jump in the game yet. I've interviewed a couple of big shots in the building arena, and they think that we're really looking at March before they start gearing up. However, if March is the date, they better start building now because it's going to take them 6 months to get a house in the ground. So
yeah.
if that's
Yeah.
really what they're thinking, they don't want to be out of inventory, you know,
Well,
as
I
soon as
think
they
that's what
can.
we're going to see, right? Is we're going to want to look at. I'm going to care more about looking at housing starts versus housing sales, right?
Right.
So if we see housing starts are picking up, or at least not decreasing, oh my gosh, new home builders, rightly so, are not building a ton of extra homes.
No, they're not right now. So listen, if you're out there and you're listening to this, there's a couple of things I want you to take away. First of all, interest rates have improved. So pigs get fat and hogs get slaughtered. Don't get greedy because that's how it turns around, right? It can whack you from behind. So you have to be careful about that.
For
It
sure.
is a prime time to buy because if there's more sellers to the tune of 3 to 1, then a buyer's got an opportunity to negotiate right now. And I'm seeing this quite frequently, even with
100%.
reductions. So it gives you an opportunity for refinances. Our refinances have picked up. If you're looking at this, everyone is not right for a refinance right this moment, but a lot of you are. So I'm really putting together every client's data. We're coming up with a strike rate and determining when the best rate for them to take advantage of would be. And then our system will just alert you, hey, that hit that strike rate. It's time to lock it in. So in the past, I've been telling all my clients just to get on my VIP rate watch list. Now I'm telling them get the application in because those strike zones can be very, very short.
Bruce, let me ask you a question about refinancing, because this is something that comes up in casual conversation when I talk to a lot of my friends and family and people that I just meet and talk to about real estate, right? When you refinance, let's say I'm 7 or 8 years into amortizing my 30 year, right? And I want to refinance just to improve my rate. I'm not looking for cash out, not necessarily
Rate
care
and
about
term,
the payment.
rate and term refi.
But I don't want to refinance the term because I want to pay the freaking house off in 23 years, right? I don't want to take it and spread it out because that, to me, that's almost a false savings, right? Because yeah, I'm spending less money per month, but overall I'm probably spending more money, even if I got a better rate, right? Because I'm spreading it out over 30 more
The
years. So,
longer you've had the mortgage, the more of a reduction you really need.
yeah.
Okay.
You do term refis, like where I can keep the same term.
You can.
Okay.
You can keep the same term. You don't have to finance a longer term if you don't want to. What we typically look at is we want to see that the client's got a 36-month or less break even period. So if you've
Yes.
got a 12-month break even period and you're going back to a 30-year mortgage, if you've only been in it for 2 years, you haven't reduced the principal by more than a few grand anyway. 7 years, 8 years, 10 years,
Yeah.
then you really should be looking at maybe a 20-year mortgage. Now, some people don't want to do that. They
Right.
just want the lower payment.
Sure. Well, it all depends on your goals and what you're trying to accomplish, right? I mean,
Absolutely.
that's for sure. But I
Absolutely.
know that for me, I don't want to have a lot of debt as I age,
I don't
right?
want any debt.
And well, that's ultimately where I want to be. And we all need to be thinking that way, right? About our debt, whether or not you want to have
Agreed.
debt or don't want to have debt or care about debt or whatever, but you need to be thinking about it. And at least whatever decisions you make need to be made with thought in mind and knowing your options, right?
Unfortunately, I think most Americans are very much unaware of what they are going to need to retire. And it is a painful process when I have a 60-year-old couple at my desk at my office, and they're like, yeah, I co-signed for my kid to buy a car and my granddaughter, and they're doing this. And now they look and they can't buy anything because they've been so kind to the rest of the world, and now they can't do it, and they don't have enough saved. You have to realize that it takes a lot of money. Your Social Security isn't going to cut it. Most of us aren't going to get a pension, right? I'm not getting a pension. Are you getting a pension? I'm not getting a pension. So even if you had $500,000 in your 401k and you averaged 5% interest on it, which that's reasonable, wouldn't you say?
Mm-hmm.
That
Yeah,
would
25
give you That'd give you $2,000 a month, almost
Yeah.
$2,100 a month.
Yeah.
Okay.
25 grand a year. That's right.
It's not that much.
No,
It's not
no.
that. And if you're trying to retire and you'd like to go on a little Viking cruise or you'd like to travel, then you better think about how much you got. And if you're in your 30s and 40s, now's the time to really focus on it. Because once you're in the 50s and you don't have enough and you're looking at that number going, man, we're not going to be able to maintain this lifestyle. Why do you want to work your whole life to not maintain that lifestyle? Isn't that why we're working so hard every day?
Should be for sure, right? Should be.
I think that is the message. If you do anything, max out your 401k, buy real estate. You're not going to lose money in real estate. Don't go, oh, yeah, I had a friend of mine, he lost money. Okay, if your timing is horrible, you might lose money. But in the last 80 years, we've only had 4 times when values have really dropped.
Hey, and you only lose money when you sell it. My house is a perfect example. I purchased the home that I'm sitting in right now in August of 2007. I don't know if there was ever a worse time to have bought a house.
Pretty bad.
Yet I'm still sitting here and it's worth almost double what I paid for it. So, I mean,
if you had to sell it in 2009, 10, 11, or 12, you'd have been screwed. But if
absolutely,
you don't have to sell it.
Yeah.
But that's like watching a stock and going, I got to sell it because it went down today. Hold off for a little while. It'll come back.
Yeah. Unless the fundamentals are horrible, then you sell it. But I mean, the fundamentals are almost always good on housing. Now, you got pockets of it. Like if you bought a $80,000 house in the 90s in Detroit, that might not have been a great decision, right? But that it is what it is.
I don't know. Maybe it is a good decision. I don't know what the market's like.
I don't know. They were worth about $1 10 years ago. So I'm not sure. They were raising entire neighborhoods in Detroit.
I'll tell you what, the message today is, and it's been the same. We've been preaching this over and over again. And I don't know how effective we are, but I can tell you, I'm going to keep telling people the way it is. And that is, it is a buying opportunity. This is your signal. This is your sign. So if you were like, God, I wish just somebody would give me a tip on how to make money in the market, there it is. There's your tip.
Well, I'll give you one more thing. People tell me, I hear this a lot. People tell me that, well, you always have to say that because you're in the real estate business. I'm like, no, I'm in the real estate business because that's true.
That is true.
Right? I'm not in the real estate business because of some random act. And that certainly wasn't my dream when I was 16 years old, right? That wasn't my goal in life, right? I got into this business because it's a great way to make money. I make a lot of money buying and selling real estate, right?
Same here.
Buying and holding, flipping, all the things that I've done, right? And that's how I got into this business. And it is a great business and it is a great thing to own, even if you're in another business.
And you can have naysayers and people that'll argue that point. And most of the time, those people don't have any money in the market. They are just arguing because they have nothing else to hold on to.
Sure.
You want to invest in real estate. Now, we're not advocating that you don't put money in the market. I think you should max your 401ks, your IRAs, you diversify your assets, but be smart about it. But the easiest one is real estate because you don't have to really do anything. You got to live somewhere anyway.
That's right.
So, have a great week, Tom.
Bruce,
this was awesome. Thank you.
You make it a great week, my friend.
See ya.